Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to a quick commentary with regard to the Federal Reserve and the big question. And the question that should be asked of the Federal Reserve is, what is wrong with the banks? Can somebody please tell the American public what is wrong with the banks? Why do I ask that question? Well, if you take a look at the Federal Reserve's own numbers, they are oversubscribed by the banks, the highest request for funding since this new not QE began in September. And between between Thursday the 24th and November the 14th, the Federal Reserve stands ready to support the banks with $120 billion worth of funding. To date, ending today, they have been authorized since the 15th of October to provide liquidity to the banks in up to $75 billion. But there's only one problem not one problem, but a key problem I have here is that I need to go to alternative media sites and the Federal Reserve's own website to get the truth about what's going on. Because I take a look at CNBC's website, all I see here, the big picture, is Elon Musk talking about Tesla shares soar after crushing third quarter earnings. The party's still on. Go buy stocks, folks. Go buy stocks. Don't worry about what the Federal Reserve is doing. Don't look there. Don't ask any questions. And God forbid CNBC was to put this on the head banner on their website. All they have here, to be honest, they do have something here. The Federal Reserve is sharply increasing the amount of help it is providing to the financial system. Thank you, Federal Reserve. Thank you, CNBC, for that informative information. Why don't you answer the question as to why the banks need this funding? Nobody is asking that question. They don't want you to pay attention to it. And luckily for the Federal Reserve, you're starting to see some earnings come out fairly positive today. Of course, Tesla shares did surge. And I mentioned last night that the earnings season really begins today because the companies that report, those are the names that the millennials really understand. The Teslas of the world, the Amazons, which is set to release earnings tomorrow, Twitter, they understand that. That'll make headlines. If they beat, they'll feel all good and they'll go about their day. God forbid they do a deep dive into what is going on, like you are right now, what is going on with the Federal Reserve and paying attention to, hey, I can appreciate the stock market's probably going to go up on this news. They're supporting the bank and providing liquidity. But what's wrong with the banks? And when does this end? That question needs to get asked. Now, what did we do today? We remained long of the market. Our gold mining stocks bounced back. We did sell more covered calls, out of the money covered calls expiring on Friday. And we did short a stock which had very, very poor earnings. And we shorted it on an oversold condition. That's going to be a multi-day swing trade, unless, of course, it gets stopped out. And we'll talk about that with members on Market Wrap tonight. We'll also talk about with members our strategy for how we plan on trading this market. It's enough for some people just to hear, the market's going to go up and they do what they want to do because they're in mutual funds, they're not trading the market. But while I believe that this market is going to go higher, we are missing a critical element to a potential rally, and nobody's talking about it. But I'm going to talk about it in great detail with members tonight. And that detail is, I'll share it with you, but I'm going to go over the charts in great detail this evening with members. The element is, there's no volume. None. The IWM, the Russell 2000, one chart in particular, while it was up today, and it looks like it's consolidating nicely, and in all probability is going to continue higher, I have to ask myself the question, can it hold the breakout? Because I'm not seeing any buyers. Take a look at the daily volume bars, and they're dropping off of a cliff. And it's not just the IWM. So watch volume. It speaks to whether or not a rally to new highs is going to be sustainable. what else is going on? Well, tomorrow we have earnings for, as I mentioned earlier, Amazon, Twitter, Intel, big names coming out. So this week has a lot more of potential landmines or catalysts to the upside to allow it to break out. In all probability, we're going to break out. The question is, where should you be putting your money? Small caps, large caps, what sectors? And that's what we're going to discuss tonight. So, folks, thanks for joining in. Join me tomorrow night on Thursday night, Stock Market Live, where we'll go over the weekend, the end of the week close on a weekly basis to see where we want to position ourselves as we move into the weekend and into next week. And of course, please sign up for the 14-day free trial offer, and we will do some additional one-to-one sessions like we did last night. Great session. We were talking about covered calls, and we're just on this pullback and consolidation on the gold miners. We've just been generating income, taking our pound of flesh out of the market vis-a-vis premium on covered calls. And we're going to be talking about selling puts like we did last night on a couple of positions tonight as well, because while I like a couple of positions, like the LABU, the leveraged ETF, putting you long of the gold miners, it's a little bit ahead of itself. So we'll talk about when I want to and what strike price, where I want to sell puts to bring in premium. And if they're assigned to me, I'll be happy with that assignment, and then we'll be long of the shares. If those shares are not put to us, well, then we collect our premium, put that in our pocket. We take our wives out to dinner. That's it tonight, folks. Thanks for joining in. Everybody have a great night. I'll talk to you tomorrow. Be well. Do, 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 do.